And then someone will be like, and the other person that will see the 5,000 will be thanking God that at least he has gotten food enough for today. So basically, the rising cost of living, prices of goods have gone up, inflation has gone up. So what are we now doing to like bridge the gap? There's a gap in it, right? What are we doing? People are looking for other means of income. You see online, many WhatsApp people are selling many things. You see some people's status on WhatsApp, it's like waste it. You now mute them. Do you understand? Because everybody has turned to online vendors. You don't even need to even trust with online vendors and all. All right. So there's also currency depreciation. Somebody who had saved $10,000 when naira was 465. If you can get our math, like 400, let's assume that naira was 400 naira, 400 naira per dollar, and you're able to save, let's say $10,000. Then how much is that for 400 to 10,000? That's like how much? Is that 4 million? Yes. Now, a naira, $1 today is like, let's say, an average of, let's say, 1,600. I'm just bringing it down. That your 10,000 $10,000 then, and now that's like 60 million. It is not 100% increment, it is not 200. That's like almost 500% increment. And you tell your parents, want to do a susu, let's save our money. You start saving from January, maybe you're the last person that will collect in December. I'm so sorry. You end up still paying, maybe if it's your time to pack your money or something, you end up paying the person maybe extra 10,000 to collect your money, right? You realize that in a way you feel like you're collecting a huge sum of money, but that is not how it is. That's not the case. That's not the case, basically. Do you understand? Because the money has gone down. Your 100,000 naira in January is different from the 100,000 naira you're getting in December. This brings us back to our currency depreciation. Then there's also unemployment and underemployment. You do someone that does BSc and masters is literally earning with somebody who has not even done HNT. Do you understand? That's underemployment. Then unemployment. You have the certificate, but the job is not out there. If you see the job, it's probably paying you something to just take yourself out of the house every day. Hope I'm not boring you with my long talks. All right. So there's also poverty and income inequalities. This one are just symptoms and the drivers of other systematic issues. All right. Then we have struggle to access finance. The money is out there, but there are limited access to credit or financial services, right? How many people would go to the bank now and they'll be able to give them loans and all? This is where AGX Tech and other subsidiaries, also World Trade in total, actually come into place. And then high interest rates, which I've actually explained. The central banks have increased their interest rates, to borrow now is a problem. You probably borrow at maybe you pay back at a percent, maybe 2.5 and 2.5% or something. It is a major issue. So to even borrow is an issue. So together, these issues create a circle of economic strain. Do you understand? So now the issue and the next point is, since we have all these problems, right? What opportunities and World Trade bring on the table? What offers? So World Trade currently offers hedging against currency depreciation. Yeah, World Trade will provide you tools and strategies that will allow individual and businesses to protect their wealth from negative effects of currency depreciation. That means you will have access to foreign exchange, all right, trading. You can use your currency. Do you understand? I'm trying to read out something here. So you can use your currency and other financial instruments to offset losses from a weakening local currency. That means you can use your naira, right? You can trade with your naira to actually get more. Keeping money in the bank is, if bank will not remove bank charges, maintenance, whatever, transfer charges, before you know it, you just see a debit of 7,000 naira. Do you understand? So you're literally still paying money to the bank for keeping your money. Do you understand? So next is source of income. World Trade will also help us through platforms, right? They help clients offer a range of opportunities to create multiple income streams. Like I mentioned, through financial trading, stock market investment. All right, and you can also have access to our classes. Do you understand? You can also have access to global economy and the financial market trends. Yeah, World Trade actually connects clients to global markets, often trading in varieties of assets, such as we have stock, we have commodities, currencies, indices, even synthetic. So the thing is, currently in Nigeria, you hear about trading commodities, gold, this, that, right? But World Trade now is the only, I think, yeah, second only broker actually that offers what we call synthetic. Now, synthetic is also a form of trading, but it is not always affected by news. I don't know if we have traders here already in the house, right? Sometimes you be on a trade and there's an high impact news coming, it can be CPI, NFP, what have you, and be like, this trade, let's hope that this thing comes in good for the dollar so that it not affect your trade. But synthetic does not work like that. And the good thing about synthetic is the market does not close. It works on Saturdays and Sundays. So even as a working class personnel, right, you are busy Mondays to Fridays. You can only earn something on the weekends. That's what we call synthetic. I hope I'm communicating very well. So yeah, that's synthetic for you. So you don't have to sit on hold. With synthetic, you can just have a strategy, work on the chart, and then you are good to go, and you can trade the market. Now we also have we build dealing well with less inflation impact. So we offer a broad range of investment products, including those that are historically considered inflation resistant. Do you understand? Recently, I think they inaugurated Donald Trump and all that. You notice some stocks are going up. That's the effect of what is happening in the market. You see people watch CNN, Al Jazeera, they are saying something is going up, something is going down. Most people don't pay attention to that. We always want to watch Nollywood and all. But trust me, there are big men that actually wait for those news because they know what they are standing to gain. We are now in Nigeria. I don't know if you remember the Russia and Ukraine war couple of years back, right? A war happened, and here in Nigeria, we saw that the price of oil went up. Do you know that there are people here in Nigeria that were actually benefiting from the effect of that war over there? How? They were in the market already. They knew that because of the effect of that war, the prices of oil were going to shoot up. They already took a buy position in the market to buy oil. And the price of oil per barrel went up to like times four. People are fighting war, they are dying somewhere, but somebody is somewhere else in his room with his phone, making money out of the impact of that war. There was also a situation of drought where there was this particular country that produces wheat. Do you understand? So the drought affected the economy such that there was scarcity of baby formula in the US. I know there's scarcity, there tends to be increase in price. When you hear scarcity, anything economic term, what do you hear? Price go up. What do you normally buy for 10 naira for one because of this scarce? And when you maybe you should eventually see it, that 10 naira is no longer 10 naira, it's not like 15 naira, but you have no choice but to buy because it is necessary. That's what scarcity does. So you can take advantage of what is happening out there to your own benefit to make something of yourself or something for yourself, basically. And the next one, we talk about employment and entrepreneurial opportunities. Right? Yes, to create employment and opportunity for people. There are little or few persons that understand this market, and there are people that actually gain from it. You see all those celebrities that you see on Instagram, trade this, trade that, they're making money, and they have people that pay masterclass membership. So imagine you understand this market, and you have the next person that Alpha, I don't know how to trade, come and teach you how to trade and all that. You can charge, they charge people for it as low as $300 just to teach somebody. So it's an opportunity for you to also broaden yourself, and you can also be a teacher and mentor to other persons. You are making money for yourself. You have also provided a means of employment opportunities for other people out there. Do you understand? So take advantage of this market while you have just few teachers out there and many people who are actually very interested in it. And you can also be financially independent. That's the whole idea of trading. You want to be your own boss at your convenience. Nobody is calling you. Send me a report by 12 p.m. and all that. Do you understand? You can literally sit on your phone and you have made your daily bread and you are done. Am I communicating? So those are the benefits which World Trade actually brings on the table and is left for you to now take advantage of. So in essence, right, we offer, World Trade offer a comprehensive suite of services and opportunities designed to help individuals. Now let's talk about age expectancy, the other um, training centers, right? So the good thing about it is there is a training center here in Asaba, Ostrich. The next speaker would actually come and finish up on that. So, Mr. Jet. Okay, let's welcome Mr. Jerry.
How many of us want to make money here? People are sitting. I don't know why people are sitting bored. You want to make money, just shake your hand like this. Let me see first. Some people don't want to make money. Some people are calling their hands. Please give me your own money. Let me make it for you. But if you want to make money, it's possible. Jump up. Jump up. Let me see you jump up. However, so my level of head let me begin this way. I of us know that the banks actually trade with your money. I of us know this. Or most of us don't know. Banks trade with your money. But then you put your money in the bank and the money is there, you think you are saving it, you are not doing yourself good. The bank is your money. Money with your money. The only thing about money is when you want to change money to naira and you want to do some transactions. I'm not most likely to spend the dollar. Some people don't like dollar. Wow. Maybe when I bring out pounds or dollar now, some people will jump up. You want to make pounds. You want to make dollar. You want to make euros. Oh yeah, let me see our hands. Now, look at it talking about this kind of money I they see for ourselves. Now, for here, the one called spend the show. No, the beautiful thing is that as a trader, okay, let me just try this a bit. There's a guy 5 years ago, I trained the guy myself. The guy doesn't have money to trade. Only was able to get about $20. So he said, I want to trade with big money so that I can make big money. Do you know what I told him? I said, you need skill first, get the education first. Now, when you get, have the right strategy to trade, the money said, how? I told him, I said, get your $20, put it in your trading account. There's no call lot size of volume. If you want to enter trade, you have to get money. Those of us that are doing traditional business. When you want to do your business, you take part of the money and go and buy. I do to resell. That money you are using to buy, that's what you are risking. I mean, there's risk in any business, so every business, don't let anybody deceive you. So you don't buy. When you buy, you have risk. And then when you risk, you wait for people to come back to buy from you, probably you sell your services. And then you make some margin extra, right? Those margin you make as extras becomes your profit. So I told him, from the 20 project small, the lowest volume, or work for the lowest lot size. And then when you do this, don't use consistently. Don't go and do that volume. Do it consistently. You know, it's always very tempting when you start and you make I think everybody wants big thing. So he said, okay, he's going to try. I said, if you can consistently make 5% of $20 for 6 months, take that trading history that you have made, take it to a bank, any bank at all, where you have, tell them you want to see the branch manager and sit with the man and say, sir, I was able to do this. I was able to get this money from $20 to $50 and $30 in 6 months. But I did something interesting. I maintained the student volume, not size, within 6 months. If you can do that for 6 months, it means you are building the discipline to manage big money. So I told him, when you do this, go meet any branch manager and tell him you need higher funds to trade. They will try. Do you know what the guy did? The guy actually funded his account with $200 and traded, just like I said, for 6 months. When he met the first person, it was a branch manager. But the man told him that he's going to fund account of $5,000. Imagine somebody that makes maybe, I think he grew that $100 to about $350 in 6 months. He was consistently trading with that minimum lot. So the beautiful thing of what he did was that he maintained discipline and consistency. So the same thing he did on that small account. If he was making, say, 20% in a month on that $100, which would be $20, if you replicate that same 20% on a 5K, what's 20% of $5,000? We don't get mathematician for here. No, we do mathematics. 1,000, right? $1,000. If he makes 20% of 5K, it means you just have $1,000, right? Now, usually, understand that when you trade for companies, institutions, banks, you are expected to get between 30 to 40% commission or profit. We call it performance fee. So he makes 1,000, he gets 30% or say 40%. The person that he has made the money for will be really happy. In fact, he will be getting the car like God. Take this 30% of 400, 40%. 30% of 1K is $300, right? 40% is $400, right? How much is $300 in Naira now? 1,650 times 300. That's about close to $500,000. True of us. Have it? Now, someone who was looking for money to trade, in his first, maybe let's say 7th month, he's now making 500,000. Now, what he had done on the small $100, he can beat on the 5K, he can beat on the 10K, he can beat on the $100,000. It's just about the skill and what discipline. I mean, I'm also to get to that level. Some people really like money. Me, I like money over here. I don't want you to get to that level. It's not everybody that will be able to do it. But the good thing about what we are going to do is that there are other ways you can make money. I'm going to show you. Aside the fact that you can learn the skill to trade, you can also completely profitable traders who are also doing well. You can communicate and make money too. And the third thing is that you can refer people, you can have a network like this and make money from the trading transaction. Does it make sense? Can we start right now? So we have somebody in the house who is a very good tutor for HST. HST is trading academy in Lagos. We have Ulrich Nasala. We have some partners who are going trading like that. So this person is going to be, we are going to be doing the training online. I'm going to see him train you. He's good. I'm going to be having him now to talk about some of the basic things you need to know. In fact, what he's going to show us now, or teach us now, some of us will have some ideas of how to take trades, how to close trade, what some instruments mean, how they are represented, what the financial market means. We are going to understand some of it now. So, without wasting much time, with a very big round of applause, can we welcome Sister Bank? Round of applause for Sister Bank. Where's Dave? Thank you very much, sir. Welcome, everyone. Sister Bank Augustine, I'm the trading educationist at AGX Tech. So, when you run my trainings, we have different training offering. And for our online trainings, I'll upload some of the training alongside the other training we run at AGX Tech. So, if you join our regular sessions, you will know that we make mention that this event is going to be very educational. Yes, we need to give you updates on how to make money. But at the same time, we need to know so that when you go into the system, you don't just throw it and you say, trading discount. Because the players, all of them, that being stabilized. You say, you just come in and then you say you lose the long game. Mr. Joe was talking about going with both sides. Basically, the quantity of transaction that you're taking on a particular trade.
So if the company then make you go to one more sense, and then your account is gone in few seconds. It can happen, yes, few minutes seconds, you can lose the whole account. And then you just go to the manager and then the person that refer to trade and say, organize your things, this kind of like I'm not done again. They get all of money. So I want us to learn some basic information so that when we see these things, when we see these things, we see these things even on our company account, we're not going to just know when to double check. We want to these things down. If you don't know exercise, it's not children. If you don't know what it is, after that, what is business? Okay, so so let's just get acquainted with the field technologies and things that we see in the trade industry. So, introduction to financial markets. So, basically, there's when we see people do something like that. It has to do with chat. Chat. You don't the enterprise. So, you can tell me. So, chat, the see, now, different aspects of trading is not everything here. You just see this thing now, just say, oh, Forex trader, I'm getting them money, not going to get money, no. So now, you see, the same thing is like just in front, but I want to make sure you understand that it's not everything that is traded. Experience is a branch. Is a branch of trading. No, the modern name is financial market. So the first thing they need to know is, okay, this is financial market trading. And then they will now go on to know what this person is trading. And then they go, okay, this is forex, this is cryptocurrency, this is synthetic indices, this is commodities like gold. And then trade gold now. So what's a trade gold? So what's your trade gold? Trade gold is everything. So now you need to know that financial markets now is the and as you can see in the slides, and okay, so it's the lifetime of modern economies. They are organized, decentralized because nobody is controlling it. There's no government of somebody that says this one will go on, this one will come down. So it's decentralized. It is basically the government goes here like this. Now let's say that the people that make up the market are together. So if there is market in this one, okay, let's say there's a particular currency or commodity that is being created right now, and it's just traded by people in this now. Now, what will happen is that the people that have at least more funds is going to try to invest in. So there's nobody that decides that it's a lot of them or to come down. So obviously, when financial assets such as currencies, crypto, like I said, typically this is stocks, bonds, all of them, and trading and the price. So financial markets is the all encompassing name for various trading markets. So there's a lot of difference between just forex and financial markets. So all of us here, from today, we are financial markets traders. So we are going to know what aspects we are going to be dealing with. So the first step for this for today, we have to zoom into synthetic indices and currency trading. So currency trading is the forex now. So when we trading different currencies of different countries, now that is where trading comes in. Okay, that is where forex comes in. So what is synthetic indices? Like said that knowledge trade is a trade that offers us synthetic indices. So what is this synthetic indices? So they are financial instruments. Now, as the name implies, synthetic, it is artificial, it is man-made, generated by computer algorithms, okay, and mathematical formulas. So now these markets, they copy, they mimic the behavior of real-life charts. Okay, so let's say you can see the chart of the just you see that not all of them have a particular activity. Now, I'm not when we're talking about synthetic, it doesn't mean that synthetic have a different way of moving. It is still going to be moving in the same behavior, maybe not the same trend, but it moves alike. So the way you trade currency, the way you trade gold, whatever you trade, is the same way you trade synthetic indices. Okay? So now the key features of synthetic indices is that it's a simulated legacy. Okay, so just put it else. Okay, so the key features to simulated market behavior. So now the strategies that we use to over trading instruments, we can use the behavior and see the same volatility patterns and everything. So constant volatility, many synthetic indices offer us constant volatility levels, and the benefit is that it is beneficial for traders who prefer predictable market conditions. Because we already have our niche, which is basically the aspect that you are already focused. Now, let's speak about when I come into the business, but synthetic indices is very good for trading because now we can benefit from what from predictive market conditions and now to control trading availability. So it's very easy. The synthetic indices you can trade in as you can see the 7-day rule, 24 hours a day. So we already try and then when you come on Saturday, Sunday, you always look at something and then you place one or two trades and then you make your money. And then most importantly, unlike the currency market, synthetic indices are not affected by fundamental synthetic indices. Some of us know that Donald Trump was inaugurated, right? And then at the same time, you have the Israel Christian that are doing them everywhere. Not that that's not affecting the market. Don't into that gold. So gold is a safe haven. The safe haven when there is something like this, right? Gold is where people push their money to go that gold is not affected by all those things. So now what do we say? No, it's synthetic indices. Me that is trading synthetic indices I was speaking to nothing percent rates. When the money has finished inside my account or not. So we need to activity by all those economic actors and indicators. And it's important, so that is why that's one of the important features that come with trading synthetic indices, and it's really backed by technical analysis. We are going to get to understand when we get the trends. It's basically you're making fast information on the particular your assets and then you predict the future movement. So it's only that in used to trade synthetic indices and it is free from drastic market movements. Okay, next slide. And there are popular types of synthetic indices. So the following synthetic indices are offered by AGX, OH, EDGET, Minota, broken of reference, that's very true. So this event is of course really sponsored by World Trade. And then the types of synthetic indices that we have here is FX volume, we have the SFX volume, the flip, the PX, and the VX. Okay, so these are the synthetic indices. So before we leave, we're going to open our account with World Trade so that we will see this instrument live from your phone and you have and see how it works. And then the one that makes the approach to what you also contribute. That's why I'm going to give you my own watch list. The one that in case you really have a lot of funds and you want to bring information, the ones that maybe you will control and then you have a lot of activity you want to, and also maybe have one. So these are the instruments that we trade, and then as a trader we want to go up quickly. And the trader we want to trade the most suitable synthetic indices for your account size. So if you're going to be trading a big a bigger account size, I'll give you what you can use to trade. I'll give you the instruments that will apply to you, and then if you are trading with smaller account size, so that even the minimum volume will not all your accounts. I'll also give you the one. So let's go to we talk about template storage. But what about synthetics and what is so forex is the currency trading. So it's basically the buying and selling of lots of globally accepted currencies, and we're making money from the changing the exchange rate. So let's say you have $100 now, and instead of exchanging the $100, you hold it. When the price of dollar was 1,500, we refused to say we're not going to exchange that now. We're not going to do it. We hold it. The price goes up from 1,500 goes to let's say 1,800. So if you exchange it at 1,500, how much will you get? If you exchange your $100 bill when the price was 1,500, how much would you get? 150K, right? Good. So now you do exchange it at that point. When you exchange it to when the price has gone up to 1,800. How much would you make now? What is it? Now, what is the difference? That is the best analogy. I don't know. That's what the online. So probably we are speculating that the price of a particular instrument, currency, synthetic indices, whatever it is, the trade will go up. And then when you expect it to go up, what do? We buy, and then when it has gone up, we sell and make your profits. The same way we're expecting it to sell, we do not. We click, we expect it to go down. What do? We sell, and then when it goes down, exactly. Thank you very much. Trade and flip this place. Okay, so we have okay, yeah, so currencies are traded in pairs and crosses. So now, it's not really because you cannot just go and say, I want to buy euro, I want to buy dollar. No, they're traded in pairs. So we have one of the most popular currency pairs has USD. So basically, USD, it means that if you are buying, let's say you are buying $1, so what simply means is that you are buying euro and at the same time you are simultaneously selling dollar. Is that understood? Let me explain it. Okay. So we have one on the left. Euro is on the left. Euro, that is the country euro. Then the currency is US. Okay. So now if you are buying this instrument at this point, right? So basically what you are doing is that you are expecting this euro to be stronger than dollar. All together. Now if you sell euro, the other simply means that you're expecting what dollar on the right hand side to be stronger than euro. This is not understood. Same thing with another one. This is GDP JPY. That is Great British Pound against Japanese yen. So what that simply means is that if you sell one on the left, that's Great British Pound, it means you are expecting what to happen. Bonus. If you sell GDP JPY, what do you expect?
You are expecting JPY to appreciate, I mean, compared to the dollar, to the pound, sorry.
We are expecting JPY to what? To appreciate, and then the GDP, that's the one, the base currency will appreciate. Okay, so that's the idea. So we trade it in pairs. And then we have these major currencies in Forex, namely what the USD, the Great British Pound, the Japanese yen, Swiss franc, the Nigerian dollar, Australian dollar, the euro, and the Canadian dollar. And then we have next slide. So that's an example. I managed Canadian dollars. Sorry. I want us to move to Nigeria. Now our naira is not very touch. No, not very our naira is useless. But okay, aside from currency crosses, we have the different types of crosses. We have the major crosses, the minor crosses, and the exotic crosses. So the major crosses basically these are currency or pairs refers to the most actively traded currency pairs in the global market. So we are dealing with these pairs here. So now one thing that is unique among other, what it is, and I'll tell you, there's always USD. Okay, I mentioned the major currencies, right? I mentioned the major currencies, CAD, JPY, Euro, but now when the major currency crosses with USD, one leg is in the front, and leg is in the back. The major what? The major what? The major currency cross, the major cross, the major cross. The same idea for a minor currency. So now what do we notice about minor currencies? Minor currencies, and the one that refers to currencies that do not include the US dollar. So now, when two major currencies don't, like there's a cross between two major currencies, but there is no USD in that cross. It becomes what? So you can see we have the euro, we have the euro. So you can see that all of them are major currencies. But there is no USD inside that cross, so it becomes what? The minor cross. So the next level is the exotic. The exotic is okay, so the next one is the exotic cross. So I'll talk about that one this is not a slide. Exotic cost is basically when the major currency, not major currencies are right. When the major currency crosses with the currency from an emerging country. Basically, a currency that is not strong, it's not really invested in the market. The example of exotic currency, the US dollar, Nigerian naira. Clap for Jesus. Clap for Jesus. So we have other we have other exotic crosses. We have the Euro Turkish lira. We have the lira as the currency of Turkey. We have US dollar, Indian rupee, US dollar, South African rand. All those currencies that are not very popular and the economies are emerging in the financial market. They are called exotic pairs. So which is one of the exotic pairs? The person is what?
Okay, next.
Key terminologies, we are going to make use of. You see this equity, widespread equity, PIPs, lot size, leverage, margin, and margin call. If something happens and they say, okay, the lot size is too high, or the lot size is too small, or what is the stop loss region for the PIP, or what's the leverage on the account or margin. So I'm going to explain that briefly, just in case you want to, we have trainings for acts and comprehensive. So basically, it's the difference between the bid price, that's the price you sell an asset, and then what and the ask price is the buy an asset. So basically, let's do an illustration. I have $100 when I go to a booking. They are booking this place. I go to a booking. This my $100, change it for me. I'm looking at quotes his price. And that can say, okay, I'll give you this thing at 1,500. How much will I make now? How much will the booking give me back now? 150, exactly. Now, do you know that after that exchange, I tell them, okay, please give me back that $100 that I just gave you now. I want to collect it from you. I want to buy it back. You know how much I got from you? The one thing talking about no. Because I give you back the money. Before you say you don't increase, you say you have the same price when you say good amount. People say exactly that is it. So the price you sell is different than the price you buy. Unfortunately, the price you sell is little cheaper than the price you buy. So the difference between the ask price and the bid price is called the spread. So let's see a chart. Can we quickly go to a chart? Let me show you something. This chart shows you bid and ask price. See, click on instrument and then go to any 1 minute time frame or something. I want to show anyone here. Just click. If it's open chat window. Thank you very much. So you see these two prices. You see these two prices. 69, now, are you seeing that the market price, but at any point in the two prices that was being quoted to, if they sell now, what color will the sell position enter? For what I was explaining now, we have the red line here and the blue line, right? What I was explaining now, if you sell this thing now, what color will your sell position activate at? Red, right? And then if you buy, what color? That's right. So that's the difference between those two. Is that you have to choose a broker that has price and you don't want the blue line over here and the red is here. So we place a buy trade. Then it will show you. It will show you. Then before the thing will go up and down, reach zero. Tomorrow will reach. So buy trade offers you a very tight price. So one of the key aspects of choosing a credit broker. So it's not for everyone. Okay, so let's go back to our presentation. And then the next slide, we have explained all of that, right? I think we need to, yeah, we understand what spread is, right? Let's go to the next. So equity refers to the current value of a trader's account. Okay, so if something happens and somebody mentions equity to you, since you are now financial market traders, you should know what equity means. If the current value of the trader's account, taking into account what the open trades, profits, losses. Are you together? Yes. Okay. So let's say you have a random trade on your account. Your balance, plus or minus your unrealized profit or loss, is the equity of that account. So let's say you have a 1,000, taking a trade, the trade is running in minus 10. What's the equity? Now what? Someone says 90. So you have $1,000 account, and then your spread is running at, you are on a profit of your trade. Sorry, you're on a profit of plus 20. What's your equity now? Okay, guys, but exactly. So you can see that say it's a dynamic figure. So as your profit is going up or you are losing, the equity is changing. But when you close the trade, your equity becomes your balance. Is that understood? Your equity is your balance plus or minus your unrealized profits and loss, right? Now when you close that trade, your equity, whatever the number was, let's say 990, that you are losing trade. Right? Let's say you're losing trade. You're losing trade was 20. That's $1,020, right? The moment you close that trade, the equity, the balance. So the balance is not what? 1,020. Thank you very much. And then it represents the amount of money that will be left in the trading account if all open positions were closed and all fees and charges were settled. So basically, there are some trades that you may need overnight. Is a small, very small percentage that we charge for that trade that's called swap fee. If you leave the trade overnight, right, the one swap fee, then there's some brokers that do commission. So very small money is commission. So now when everything is settled, your balance is what you get, all right? So I want to copy it. We are going to do this together. I like the way so many of us are responding. It's because the thing is thinking. I mean, people are already making money. When the thing is thinking, you are making money because it's knowledge. Knowledge is money. You agree with me? Yeah. So somebody asked a question yesterday when we were on air. So I want to, at this point, I want to answer that question so that everyone will understand. When Sito was explaining spread, he said, when you take your $1 to the bill change man to change, the man will tell you this $1 is, I'll give it to you at 1.5. I mean, let's assume 1.5. Now, if you decide to collect 1.5 equivalent naira, what it means is that that bill change man is collecting that dollar to sell back to somebody else because he's not going to spend the dollar in Nigeria. So the bill change man will wait patiently for someone else who will come and buy the dollar from him. By the time the person comes, it could be the next 1 minute. The person comes, he's not going to sell back at 1.5. He's going to sell back at say 1.520 or 1.510, depending on the size of money that the person wants to buy. So let's assume Tito decides to come to me and to pay the change man and say, that dollar with you, give it to me back. Sorry. And I said, this dollar, I'm going to give it to you at 1.520. What it means is that what I'm going to be getting back, me being the building man, we have an excess of 20 naira on the 1.5, right? Now, the 20 naira on the 1.5 is the profit that I, as a very gentleman, makes by doing something, by collecting a seller in the first instance of the dollar towards a buyer. Don't get it now. So the green man is more or less like an intermediary or someone that links the buyer and the sellers together, but makes 20 naira in the process of doing this. Do you get it? So that 20 naira is his own, the money he needs for that service. Now that 20 naira could be more depending on the size of money that it transacts. Do you get it now? Now that money the change man is what web trade, the broker, the trading broker is. The trading broker gives any instrument you may want to trade at any point in time. The trading broker will show you the bid and the act. If you click the bid to sell or you click the act to buy, once you click that click under microseconds, the market locates someone who wants to buy at that price you want to sell.
Do we get it now? So once you locate that person, the person could be anywhere. Once you locate that person, it links your trade, your transactions together, and then the broker gives the slight margin, which was the 20 naira the day the claimant made. Do we get it now? So at that point, the broker makes the difference. Do we get it now? So this is how we trade. The trading platform makes the money. Do we get it now? So someone was asking, are we doing this for free? What are we getting? I just gave this explanation now. If where traders and broker believes that if we have so many people who are trading on the trading platform at any point in time, if it's just $1 that they need in a transaction, not people, one person can perform so many transactions in a day. You understand when you're trading? Like you have so many people who are trading and they perform several transactions. You know that if it is $1 they make per transaction, it will be more based on the number of people that are trading. So as more people are trading, the broker is making more call the spread. I'll still talk about the spread later when we talk about the partnership thing. For those of us that are partners. Thank you. I hope it's making sense now. The reason want to make money. Thank you. So just give me justice. So this is training. Thank you. Okay, thank you very much. So basically the spread difference is the broker's gain. Are we together? Thank you very much, Mr. Jerry. I really appreciate that. So now we pick, okay, yeah. So people otherwise known as, you know what, let me just give you a simpler forming price in points. Okay, that something has moved 10, the price has moved 10 times, just whatever. So if the price of let me say this time is 100,000. So this one will say 100,500 naira. What is the movement? That is as simple as that. So basically, we have what is a small unit of measurement of what? Of price changes in an exchange rate for assets. So anytime that price moves from one point to another, the difference between the exchange rate when it was at the beginning, right? And where it is right now, that difference is called what? Exactly. So the pips can be 10 pips, 200 pips, 1,000 pips, whatever it is. The idea is that it's basically the smallest unit of measurement in an exchange rate of an asset. Are we together? So for currency pairs, like we said, the pip is the 4 decimal place. For example, you know that a euro exchanging from euros, so it is mostly quoted in 4 decimal places. That's 1, 2, 3, 4. That's 4 decimal places, right? Good question. Okay, let me just take this session then. You can answer. Let's write it down. So what do we say? If normally goes from 1, 2, 3, 4 to 1, 2, 3, 5, you say that what? Now we have some Japanese yen pairs that are printed in 12 decimal places, just 12 decimal places. So we have something there. Okay, so the Japanese yen pairs, anything below whatever it is, but printed in 12 decimal places. So you can have something like 142.15. So the goes from 140.45 to 142.16. I think that's an increase now. Exactly. So the moves to choose. What's the value of before I move on?
My name is CJ Kapat. I wanted to ask question as regards to the spread you said earlier. I wanted to ask the best broker for the tightest spread.
The answer to the question is 1. The answer to that question is what? I'm sorry. No, what can I mean at it yourself?
I promise.
Okay. Let's move on. Okay. I had example for this thing here. Have you seen it? 2 decimal places, right? We move from 110.00 to 110.00. Can you what? one pip. So that is the idea of price moves from one point to another. The smallest unit of that measurement is called a pip. So the smallest increment or decrement in price of an asset. Now, the synthetic index is fixed statement. We prepare the other segments from this. Now, synthetic index is different from currency, right? Thereby, we not measure. What we have to do is subtract the new number from the what? From the old number, and then this is the leakage. Have it together. Don't worry, the apple, the method trade by apples designed in such a way that we can calculate it how to without the community. It will just help the difference. It's very, very easy. Are we together? And I'm not doing that. That's something that something we should have mentioned or something. But it's also how you measure your profit or loss. Are we together? So depending on the volume of trade, what size, we're going to what size in a second. Depending on the what size, the volume of the trade. So your peak basically is the what size, that is the volume multiplied by what? The peak movement. So profit or loss on a trade is what? Lot size, that's volume of the trade multiplied by what? By peak movement. That's when you know, if I make $100, if I make $10 on a trade, if I make $1,000 on a trade, that is how we know. The profit or loss is equal to what? Lot size multiplied by what? Otherwise, any question? What size? What the question? Exactly. So profit or loss on the trade is equal to what? Lot size multiplied by it. So I want us to get this information because we're going to do a lot of different trader time from here. So we need to get this basic knowledge. So the next step is about is lot size. So basically the standard limit of measurement of the volume of the trade position. Now, you cannot just go and say, I want to buy synthetic indices, say flip X1, or I want to buy flip X2, just like that. No, there is the volume, there is the amount of it that you have to buy. We can limit that you have to purchase or you have to sell, whatever it might be. So it's basically the quantity of the instrument or asset that is being transacted on a particular trade. Are you together? So for let's say you want to, let's say like the China is selling rice, and so I want to buy one American or two. So now the lot size is what? That number. If you go to the market and say I want to buy onions, the woman is selling full baskets like this. You don't know how many onions inside that basket. But all you know that you're selling what? Basket by basket. Okay? Then you say I want to buy 5 baskets. Now that number 5 is your what? Is your lot size. That's what the quantity that you are engaging on that trade. That is simply what lot size is. And okay, so we have different types of lot sizes. We have the standard lot, the mini, and the micro. The standard lot, the mini, and the micro. So now in the case of currency trading, when you engage a trade with your lot size 1.0, you can reduce it practically. You get your lot size 1.0 on this trade. Are you together? You simply know that you are purchasing 100 units of that currency. Remember the idea example of basket I said, if you don't know exactly the number of onions that inside the basket, then you know that onions fill the basket. Are you together? Are you together? Exactly. So when you say you want to buy one lot, now let's say there are bigger baskets and there are smaller baskets. So that the bigger one now is what? Standard lot. So basically that represents 100,000 units of the base coins that you are trading. That's what it is. So that's just what it is. Are you together? So you don't know the now. The base rate is what? Zero. The one on the left is the base. The right is the what? That's just what it's called. Base and quote. Sorry. Base and quote. Now if you so you're putting a lot size of 1.0, that means you're trading what? 100,000 units of the base currency. The same thing now with the minimum. Any number you put on your MT5, that's the trading platform. From 0.1 to 0.9, that's mini lot. That's simply what? You're trading with 10,000 units of the base currency. And then lastly, we have micro lots, 0.01 to 0.09. What that means is that you're trading at least what? 1,000 units. Now, if you are trading, let's say you are trading 0.5, what's that? Which type of lot is that one? Mini lots, right? And then what is the units that you're transacting at that point? 0.5. Sorry, what? 50,000 is the answer. Why? Because they give 0.5. If 0.1 is 10,000 units. So 0.5 is what? 50,000 units. Are we together? Now the same thing here, micro lots represents what 1,000 units. So let's say you are trading 0.09. How many units are you trading? 9,000. Thank you very much. Okay, next slide, sir. Leverage. This is one topic that people get confused. So leverage, what is leverage? Leverage is your broker and avoid truth. What it is telling you, okay, the money that you have in your trading account, all right, $100, even 50, $20. Now they are giving you a leverage to trade higher volumes of trades with your small capital. Altogether, when your broker is to control what a larger position with a small account, right? With a relatively small account capital. Now I just told us that when you put 1.0, you are getting 1 minute. 31 minutes. No problem minutes, right? You know somebody that has $1,000 and credit. That is where leverage comes in. So it allows traders to amplify their trading potentials and increase the size of their positions beyond what the accounts could normally handle. You see that you are trading something that has a higher size. But the account size, I mentioned $100,000 just now, but the one that has $1,000 can trade it. Why? Simple leverage. So now leverages are expressed in ratios of 50 to 1, 100 to 1, you have 200 to 1, 500. What that simply means is that if you have, let's say, $100 account, right, and your broker offers you of 100 to 1, it means you can trade positions and it's 100 of that your account says $100 multiplied by the leverage ratio of 100. So how much trade can you control now? Sorry? $100 account size multiplied by your leverage ratio by your how much can you now control as a trader in that? Are we together? That's simple. So you have leverage of even 1,000 to 1. The leverage is there that brokers that can offer 1,000 to 1. So what it means is that the leverage package is what your account size multiplied by what the leverage that your broker is offering to you. You can control this amount of trades of volume on a particular trade. So for example, with the leverage of 100 to 1, a trader can control a position. What? With what? Are we together? Exactly. While leverage now, very important. While leverage can magnify potential profit, it can also what? Are we together? So I'm not going to preach prosperity gospel. I can tell you that yes, you can make money, but at the same time, leverage can man your account. Are we together? So now that is where what? This money is because you think that you need 1,000 to 1, you're going to squeeze it up. Are we together? Because in the trade that can just go 2 pips against you, 2 pips against your account. Together. So what you know what apply good risk management. You know that the percentage of your account that you are risking on a particular trade, and then you have to do what a risk, what you can afford to lose. And this is what very, very important. You have to risk on a trade which you can afford to lose. All right. And then when you are winning a trade, you have to win more than your risk. This is a risk $50 trade. Right? Leave the business trade, you should be what? $50. But when you win the trade, you should at least $100. Okay? Because now that puts your account, the equity of what equity, right? The equity comes always on the rise. So your risk management is very important. You have to risk what you can afford to lose, and then you have to win higher than your risk. Are we together? Thank you very much. Next slide. Next slide is margin. Margin is the amount of money that is required to open and maintain trading position. You cannot go to the market without money. Are we together? You cannot go and tell someone that is selling baskets, give me all your selling, walk away. Are you with me? So the same way is if you are into real estate and so you want to buy a house, tell you okay, I will 10%. of this thing, then I will give you the how then you can pay what till you finish it. That's basically what margin is. And that's together, every trade position, every trade that we open is a small but good faith down payment from them as a trader that this money in your account, we can run this trade for you. And that's together. When we close the trade, the money was it will return to your balance. And that's together, that is basically the little percentage of the local goods. Broker pays that money, say, okay, first to ensure that you can run this position, depending on the size of your lot size. I tell you that, depending on what size, you can say, they will run this money for you. This shows that they can run this position. Are we together? And then what happens? And then you close the trade, your money is returned to you. Okay, let's continue. And then there's something called, okay, margin is calculated cost, unit of trade transaction divided by leverage. So now how do you know if you have the margin to hold the trade or not? If this calculation comes in, are we together? The trader, let's give you one, the trader has a $1,000. Are we together? The trader's broker, are you there? Are you there? The trader's broker offers what? Offers what? 100 to all leverage. Those are the things that are certified, which is very understandable right now. Then he or she, you know, the gender inclusive, he or she opens the trade with a mini lot. What's the mini lot? The recall, right? Start with what? Mini is what? Micro is what? Very good. So the opens the trade with a mini lot of what? 10,000. Now what's margin? Limit of trade transaction divided by leverage. So what? Margin is what? The 10,000 leverage. Is correct? Okay, yeah. The 10,000 limit of transaction, right? Is divided by what? The leverage package of the broker. Are you seeing? So now the answer is what? $100. So now that trader can place that trade. Are you seeing that? If the trader has, let's say, $50 in discount, we will not allow the broker that position. You know the idea of margin, and now before, therefore the margin of the trade is what? $100, meaning the trader does need to have at least that amount. And as you can see, the trader clearly does, the trade will go through. If you don't have that amount, and then you go to place that, what are the payments? May that not be a Jesus name. So margin call, this was the margin call. So margin call is a notification from your broker that tells that the equity in your trading account has fallen below minimum amount needed to maintain your positions. That is the most dreadful minimum that you get from your broker as a trader. You just do, let's say you're eating food. You just the talk, you have a 30% you now see margin call. Margin call, what does it mean? Margin call, how? So basically what this means is that unfortunately you have done your account. The account open. So basically, when you are running trades, never always fundamentally so what is key. When you're running your trade, when you're everything, you have so many open positions. You call it stacking. You stack, you put now, the margin your trades are going loss. The market can come in loss, but you never in profit. I need to get that. I will trade this money around 5 million. You will if you want to close that trade. The trade went in loss. Now, you know what I did? Let's get the phone and see that. Woke up and then I was in profit. So basically, there are times where you can fluctuate. You know, the price is always what fluctuating, put together. So you can have a temporary loss. Now, when you have calculated, you have a finite size, you know that you have good margin on the trade. You are not scared of all this fluctuation. Get together because what your account can take another people. So margin call return, the running trades have become too much and it's now exceeding the margin requirements for your account. So what will close all the trades for you loss and tell you that you have tried. That was it today. Okay, so that's margin call. All right, so do's and don'ts. you see this term a lot. You see bearish. What does it mean? So anytime you see bull, it means what? Buy. It means uptrend. It means increment, whatever you might call it. So if I say that you're bullish trend, what does it mean? You're not trend, right? If I say that you're bearish trend, what does it mean? Thank you very much. So bull, another word for buy, like up, is what? Long. So if I say I'm going long on specific indices, float X1, that is what? I am buying float X1, right? So if I say I'm shorting gold, what does that mean? I'm selling gold. That is just the information. So you have buy, buy, and long in the same bracket, right? I think I have what? Buyers, short, and what? Thank you very much. All right, so now is when the currency value is expected to rise, you want to place a buy trade. But when you expect the currency value or when you're trading to fall, the price to fall, you want to what? You want to place a sell trade. So before that now, we are told that we are all speculating. See, people talking about speculating. But don't all any of these things that you are trading. I mentioned that the evidence, we don't want them, we are not actually going to buy them. When we do is we open our phone, we see the financial instruments there, and then we do it, we speculate. Oh, we look at the thing, of course, you do your analysis, right? You will see that okay, gold looks like it's right for a buy. What we want to we buy from the increment of what? Exchange rate. And this is one bonus from prices at on top of another point. As you are not make profits on that trade or you are not making profit on that trade. That is why you are only speculating traders. Okay? Questions? Any questions from anybody? From everything that we have just learned? Okay.
Yes, thank you for Jackson my name.
Okay.
My question is based on your explanation regarding spread. Then you also talk about commission. Then you talk about swap too. And when you talk about swap, you refer to the money you pay when you leave your trade overnight. So at what point does one get that commission? Who pays?
Okay, swap.
Yes, talking about swap and commission. I need you to throw light on the
Because basically when you have a running position, you actually pays, right? But the answer you can see, no problem. So swap fee is taken from your running trades, your equity. I used to do that. So let's say you have a let's say you are plus 15, right? Now that trade, you open that trade, like you open the trade now, let's say which one you open that trade. If that trade runs to 12 a.m., are we together? The broker will charge me 0.03. Are we together? And then you call that what? Swap fee. Okay, now the time where the swap is engaged is what? Midnight. That's what now. So what days is from your trade charged. Are we together? So if you're on a loss, you know will be on a slightly higher loss. And if you're on a main trading that you need to small. Are we together? So it's just a fee. Okay, so if and also traders and traders that hold trades for long weeks, even months, sometimes years, you know, your swap fee. Are we together? The swap fee will be kind of the waiting for funds. Okay, but if you're a day trader, you know, you open your trade and you close it, you don't need to pay. So your swap fee is going to be minimum for you. Any question? Are we okay?
My name is David Eze.
Okay.
I want to ask if there is a way we can take either a hard or soft copy of this lecture.
Okay. After now you can just. Any other question? Mr. Day, you have a question for me?
Yes, I have a question. I can see a lot of people are, Some people are biting their fingers, and some people are, reminiscing their account. I won't take the name this dollar. The question that this person asks is not by magic that the broker charges you swap. I want to explain the reason behind the swap. How many of us have heard anything about interest rates? Interest rates. Do you know that every country has interest rates for their particular economy or their currencies? Do you know that? There are some countries with interest rates higher than the others. Like for the past so many years now, the interest rate for the Australian dollar is always on the high side, it's always up. And then interest rate for Japan, very small, 0.25%. In fact, there was a time their interest rate was below 0%. So now let's assume you decide to trade a currency pair, Great Britain pounds with Japanese yen. You trade that pair. And you know quite well that the Japanese yen, the interest rate on the yen is very small, let's say 0. And the interest rate on the Great Britain pounds, as you speak, I think it should be around 1% or so. Now, this particular pair, GBP, decided to sell. Now, when you click on sell on your pair, what it means is that you don't want to buy the Great Britain pounds. You actually buying the Japanese yen, you are selling off the Great Britain pounds. Whenever you click on either buy or sell, what it means is that you actually performing your transaction based on the first currency. So if you click on sell, you are selling the pounds, at the same time you are buying what? The yen. Now when you sell the pounds, you are selling the currency with a higher interest rate. Now if you allow your trade to move, because you are selling the currency with a higher interest rate, you are going to be charged a negative swap. Do you understand? But if you are buying the currency with a higher, let's assume the yen was higher in interest rate than the what? Than the pounds. If you sell the pounds at that time, you have a positive swap. So it goes based on the instrument you are trading and interest rate per time. You can go and particularize and check. Open a demo, you can get back to your expected amount. Tell us to pick any of the currency pairs, check the interest rate of the currency pair, the two currencies, and then pick the pair, and then take a trade, and leave it for 2-3 days and see what happens to the swap. Do you understand? So it's not, everything we see is not magic, it's not, because some people in their head, this thing that they are talking about, say, sure, say maybe or maybe magic that they perform. No, it's not what? Magic. So as time goes on, because this training, how many of us are enjoying it? No, one good thing about this industry is that you get exposed economically. Some of us, when something wants to happen in the global economy, we have an idea because of our knowledge in trading. So trading is good. It exposes you to the global economy. It gives you the trading skill, empowers you to make money on your own. It gets you to become a portfolio manager. We have some guys who have 20 big accounts by virtue of what they've learned over time. And then when you go to a public place and they're talking about what's happening economically, you can talk. You can talk. We have people who didn't read economics, but the virtue of trading, they can say things that make sense. And people listen. 3 years it now. Me, I did not read economics for school. 1990. But when it comes to talking about impact of political events, economic data on the trading industry, I will stop. And it will make sense. Do you understand now? So most of what you are going to learn, you have just started the training, you're going to have it in the course of the training you are going to be having as you proceed. This is the training you're going to today. So you want to fly an aeroplane, you can't enter to the listing and want to fly that day. No, it has to be gradual. And in that time, you can begin to move the plane on air. So I think we'll come. Do you still have any question on this? Oh, we have a lot of questions. Okay.
My question is, so as a beginner trader, maybe with a very small account, like something like $30, and they place a trade with 0.01, and let's say the trade is in profit, is it advisable to open multiple positions? The trade is in profit. It's not a bad question. It's not a bad question. No, it's a very good question. Why are you laughing now? It's a very good question. You recall I talked about risk management. Hello, sir. Please, what do you mean? You're not telling me. I'm friends. We are friends. So now remember I talked about risk management. Now, your trade is in profit. Okay, you know that you can secure a trade in profit. You know that, right? Personally, I don't want to lose enter trade. Now, if your analysis aligns with you putting another trade, what you do is you lock in the profits of the initial trade. You can secure some profits from there. There's something we call closing cash outs. You can close some cash outs or you can break even. If your stop loss, you know what stop loss is now? So that you don't know more than you wanted to know, you put in another thing. You can move your stop loss to break even. So that the risk on that trade is eliminated and the first trade is eliminated. Then the next trade is open. So you can place multiple positions so far as you are still within the risk limit of your account. Is that okay? Thank you very much. One is land the question. Land the question. As a beginner who wants to practice with solo, like how do I understand when to buy or to sell? I'm not looking at the candlesticks. Okay, that's one of the things I will teach in AGX. So after now, people that are going to be undergoing training, just wait till the end. They're going to meet with you and then we're going to onboard you. So all the questions like analysis that I talk about will teach you how to do that. I can do it by yourself at any time. I don't think that's just wait till the end. And then the people that want the educational portion, wait till the end, and then we're going to give you more information on that. Thank you very much. Okay. And let's be when you make the last question, come give Mama Mike. Only then the talk since. Yeah. Mama, I'm not for Mama, man. Don't cry now. Easy.
Yes, sir. Please, I want to ask, does news affect synthetic?
Okay, that's a very good question. And in the beginning, I explained it. News affects currencies, forex, every other business, but synthetics it does not.
Okay.
So whenever drastic movement or behavior of price during a news release or an economic indicator is happening somewhere in another country, it does not affect synthetic indices. The price is constantly moving at its usual volatility. Thank you very much. It's not enough again. One more question here, please. What's more? You already asked that. We don't give you the question. You can meet us later. The second thing. Okay, see, please just do the hair. That's the last question. Thank you very much. Please, your name, sir.
Good afternoon. My name is Dominion.
Okay, good morning. Good afternoon, Mr.
I
Dominion.
came in with this, like when you talk about the lot size.
Yes.
Mike, when you come about the lot size, yeah, you say that the lot size are very different. So you say maybe this lot size as a beginner, which one is more suitable for a beginner, like a fresher, like
Okay. Fresher, I wonder level students. Don't worry. So the suitable lot size is depending on your account. I don't think that. Depending on your account. there's a calculation for lot size. So your account is not open. You don't go down, so you don't go in the account. So like I said, we have different lot size. All you have to do is use the lot size that applies to your account. If you have a higher lot size or a higher account, you can do unit. If you have account, you can do standard. If you have a small account, you can do micro. The point is make money. Are we together? Depending on your budget, depending on so lot size is everybody should be trading. Don't say that my account is small, I cannot trade. Even if you make two, you make $5 a day. $5 a day, you don't have to sell. You don't have to put from someone. You stay in your house and $10, that's something for you can reward it. And then also like to $20. So even if $2, I'm not it's one of the best things that you can experience as a trader. I don't care how much things that you pay. On one channel, I just trade for people who make money. When make $12 an entry, I can't forget the most because my first time starts. I want to tell them. So the last question from. Good afternoon, my name is Simon. Okay. You made mention of synthetic, that is 247 trade. So Bitcoin needs to trade on Saturdays. Yes. So, but mentioning the news, Bitcoin happens to be like a BTC USD, for instance. So there was a time I was in that trade, and there was a news, and before I know it also spiked. So I'm asking, does it really have to affect it? If whatever thing is happening on a particular currency, right? Let's say something happened in the USD, in the United States, any currency inside of it. Even if it's cryptocurrency, even if it's USD, something will happen. Even if it's Solana, even if it's Solana USD, something will happen. So the point is, if it has to do with USD and something happened in the USD, in the United States, it will affect. But we don't have that spikes. Now you can trade it in first trading, but I'm happy with that as a beginner, and you can actually use to get out on the trading, then you can diversify it so you can take your skill set and apply it to any trade, the right trade currency, the right person businesses. So thank you very much, Mr. Samuel, right? Mr. Samuel, one more question. Okay, last one. We have other speakers. Okay, are you?
I don't know.
Synthetic, okay. You can go to the next slide. So that will offers a vast range of synthetic indices. So we have FX0, we have SFX, we have Flip, AX, and Linux. Now, each of the aforementioned synthetic indices have variants ranging from less volatile to what? To very volatile. So as a trader, you want to trade with the synthetic indices for your account size. So like FX0 now, we have FX0 20, 40, 60, I think we have 99 also. Then SFX the same thing. Now for Flip, we have Flip X1, Flip X2, X3, X3. Then we have the 400, 600, 800, 1200, and we have the same thing. So you see that these numbers they indicate the volatility of that particular specific indices. So you want to trade with say you have a dollar account and get the color 700, 800. If you have a smaller account, you can do the FX, the 20, 60 or Flip X1. I want to get that. So there are numbers. So these are the things that you in your account to see. There are different numbers. Let me just show you the front of the FX and Flip X1, X2, X1. It's like there's a lot more. FX 40, 80, 99, SFX, a lot of them. So you see that as the numbers increase, the volatility levels. So that's the idea of syntheticity. So I want to thank you for giving me your ears. For any other questions, you can raise with me and then we will talk later. So thank you very much for having me. My name is Asaba. Thank you. A bit of value, really. We've gotten value, right? Please come the way. So far, this is just a tip of the iceberg. Now, you want to go on this journey. This is what is called introduction. You want to go on this journey, you have to sit, fasten your seatbelts, then the journey begins. There are different interested people, both online and physical training. We also have partner, editors, OH, and Utah. All right, depending on where you belong among all of these sessions, the journey has started, introduction is there, then you can take the journey from there. All right, so our time is past time, and we don't want to bore you before we story begin. Someone has been in here like 2 or 3 times without introduction. Right is the person who brought us together. World Trade is the brand that brought us here. There is somebody piloting the affair in Africa. He will be coming to tell us, to show us the offers from World Trade. What does World Trade offer as a broker? He'll be coming to take us through that, and he's no other person than the person you have seen him several in front with that introduction. But permit me to introduce him as I welcome Mr. Joey Okonkwo. That was not like
you or anybody that wants to copy me can actually follow my trades and make money as I'm making money. So if I make $10, for example, this day or this week, you also can also make that $10 if you have the same amount of money I have. Do we get it now? And one good thing about copy trading is that you must have the money the guy is having. Even if you have just $100, you can copy. $100, you can copy. And we're going to be showing us results of people who are actually doing copy trading and they are making money. We're going to show us results. We have a lot of them. You have traders too. And if you are a trader, you know you are good, you can also open a copy and trade. Let people copy you and follow you. You also make money in the process. We're going to be showing us that as we move on this summit. Go ahead. Next slide. And then we have this product. This is one instrument. This is a product that has given web trade a very big push. So many brokers, traditional brokers, don't have this particular business, except one. I'm not going to mention their name. Globally, they are our competitor as we speak. So, but web trade now has the synthetic indices instrument. Why the synthetic indices instrument? I will tell us why we have this now, and I also encourage all some of us that want to start to learn how to trade the synthetic. The normal currencies, stocks and co, when there are economic data releases, when there's a political releases, how many of us knew when US experienced World Trade Center, when they struck the World Trade? How many of us knew that time? Those terrorists, they went to that jet, and then that day I was in front of my chart, that day, many of them happened. The dollars started falling. So anybody that was trading, say, US dollars, that was selling, that was buying oil, you've been making money because of that drop in dollar. When the dollar dropped that day, made that thing happen? Who will tell us? Normally somebody had analyzed it and just maybe he wanted to sell the euro that day against the dollar. He wants to sell euro USD. And that is not happened. That the impact of that news will distort his own arena. It's not as if he doesn't know what was doing, but because that's an unforeseen occurrence. Do you get it now? So such thing can affect traders, perception, traders' judgment. Do you get it now? So brokers decide to come up with synthetic indices. For synthetic indices, whether there is a news, whether there is a war, whether there's a political, it's not affected. So once you have done your analysis and spot your opportunity, you can actually take your trade and trade. So that day, that's 2011 again? Yes. A lot of people lost money. The reason why that happened is because it's simple logic. Mainly they struck that 11 everywhere where people were running here and there. Investors began to get scared that the investment will not be safe any longer because terrorism has struck the world's strongest country. So what it means, within some time, people started selling off their investment in the US. Now, let's say you have an investment in the US, you are doing business there, and you have made some money. The money you make in the US will be in dollars. So at that point, you start moving your investment away, you have to sell off the dollar and buy the currency they want to take a loan to. Even if you are in Nigeria, you have money in the US, you will want to convert your money to Naira. By converting your money to Naira, you're selling off what? The US dollars. When you begin to dump the US dollars, a lot of people are dumping it. You are making it useless. The value will now start dropping. So that was why you see that stuff collapsing. And it did that almost a month or thereabout. Do you understand? And not only that, even when the war in Ukraine, Russia-Ukraine war started, we saw that EU was selling. The war between Russia and Ukraine created serious issue for the euros. So people were not confident to keep their money in euros. And when they begin to sell off the euros, what happens? The value of the euro begin to what? To drop. So this is how these things will play out. This is just the what we call fundamental analysis. Do you get it now? So, but for synthetic, you don't need to be like wondering or bothering that. Yeah, what if they go and release a news that to spoil everything I'm doing? So you don't need it. So this is one thing that a lot of people are exploring on world trade. Look, please go to the next slide. So, how many of us have traded and withdraw on world trade? We have to trade today. Read that story where a fuel attendant introduced a client. How many of us read that story? That was about 6 years ago. This guy used to work on the island in Lekki as a fuel attendant. So, as a day, we're doing something like this. So, you know, we gave man that half of the money. And then we now had some traders that were very good. So, the guy now introduced the man to Tiger Woods. The guy used to be Tiger Woods. And the man needed deposit $1 million. So that account was traded by a very good trader. You know, if you are trading in such a volume of money, it will be your 0.01. it will be your 0.01. The trader will be taking like 15 lots, 100 lots. 0.1, the spread will be just $1. But on the 50 lots, the spread will be $1,000 per trade, just per trade. So imagine if the trader takes, say, in a week, 20 trades, $1,000. So we now share that 20,000, the broker shares it. It's not going to be big money. This guy was withdrawing 7,000, 8,000, 10,000 on a weekly basis. He doesn't know how to trade. Just one client. Introduced. The guy resigned from his. He became in town. And they were asking him, where are you getting money from? The guy was all laughing. Do you understand? So that's the good part. If you have people that have such and have good traders, you will make money. Do you understand? So that's one. We're going to talk about this much later. Go to the next slide. Okay, this is the part that I just explained now. This is how you get to that part. So next time, oh, that's the end for Wentry. So these are the offerings we have on Wentry. Those of us that have been training before, Wentry is a very good platform which you can join and then trade. Have issues or challenges, you can always, ask questions. We are going to do something funny today. There's a guy we are expecting to join us, a very good trader. He has some things he's using, and we have other partners in the house who have some friends who are also trading, making money. And while we are waiting for him to join us, there are certain requirements we want some of us to do before we can get our giveaways, because we have a phone that we're giving out today. So the processes of you getting the phone, who's going to be the lucky winner, and some of the things we have. Somebody will come and explain to us how we are going to go about that. Please let's be ordered, because we might need to split ourselves in groups. How many of us came through? Yeah, how many of us came through every jet? Every jet. You saw every jet flyer and it's registered on Facebook. Every jet, EVIJ, yes, EVIJ. So how many of us saw AGS Tech? How many of us came to Orange? Oh, so those of us that know that we came to Orange, you go to this side. Then those of us that came, if you heard it on radio, or you came to AGS Tech, please remain between here and here, like this. If you know you came to every jet, the last two seats by the back, just sit down there. Somebody will come and address you. But if you came to AGS Tech, you were in the forum, or you heard on radio, stay between here and this part. Those of us that know Orange, you know Orange before, or maybe he invited you, just stay on this side. Take this column to that side. Please, let's do that today in the next 2 minutes. AGS Tech, into AGS Tech, from here, ladies. Please, let's be orderly. If you came from MJ, look at him. Mr. Rick is pointing his hand. Go there. If you came, sit. These last two seats behind to be for evidence. Rows. Okay, maybe this side, this angle. If we are for evidence, not to stand. Those of us are here, this find your way to the place. Yes. Please, just find your way. Now, those of us that are here, how many of us live in Asaba? Live in Asaba. How many of us would like to take the training in Asaba, physical training?
So because we have physical training in Asaba, which is going to be done by Orange, we have online training, which is going to be done by AGS Tech. Do you get it now? So those of us that will not be chance to take the training physically, but you know you can be chance to take the training online because we want AGS Tech brought online training in the morning and in the evening. You can remain here. Do you understand? So we need to count now. Let's take a number. If you know you are here, if you know you are in AGS Tech, please you are going to take a number. I want to have a number of people on the AGS Tech. Yeah. We do what we want to do fast. We are going to wrap up this in this few minutes. So it depends on if you get that message. Okay, when you get the message, if you got the advert of Facebook, probably you can added into a group called Asaba. You added the remain here. Do you understand? How many of us have opened accounts here on Orange? You have opened account with Twitter here. You have opened account with Twitter. Have an account with Twitter. It's raise your hand. Take it up. Seven, 28, 29, 30, 30. Of you. The 30 of you are counted here. Please, you are going to join Orange. Do you understand? I counted 30. All of you here. You are going to join Orange. Now, what you are doing, basically, you want to assign somebody to you that will help you in the process of opening an account. Whatever you want to do, you can easily talk to that person. The person will be able to guide you properly. If you want to do your training, you can reach out to him, be able to guide you properly. Do you understand? That's why we are doing this splitting. Do you get it? So those of you that we've counted, about 30 of you, please meet Mr. Dixon. Do you understand? So all the accounts you are going to open is going to give you a code you are going to use to sign up here. Do you get it now? So the reason why we are doing this is because shortly for the people that someone that is going to win that phone, everybody must register an account. And every account has its ID, so we need to have the ID of everybody. Do you get it now? And we want it to simulate. So you have to meet him, or he's going to share a code which you will use to sign up your account. Mr. Dixon, come and call up. So those of you that are here, please listen. Once you call this code, I will show you where you're going to put that code and display the website and you register. Mr. Dixon is the one running the training in Asaba. Orange. Do you understand? So those of you that want to take the training, you can still take his training. It has been in the system for quite some time. And most of the students are doing it too. Do you understand? And then those of us here, please let's count from the back. Let's start from the back. Are you for AGSA or EBJ? EBJ. Ross, the man in blue. Okay, good. So, are you AGSA? AGSA. Pick your number for me. 1, 3, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. The man in glasses, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, this 39, 40, 41, 42. Hello, sir. 42, 43, 44, 45, 6, 47, 48, the man. 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, and then 61. 10, oh, 62. So, 62, of course, if you are not, if I didn't count you and you are here, let me see your hand. I didn't count you. So, how many of you are there? No, we counted you before. I counted you before. I've already counted you guys before. So I was at the end. We counted 31. You got a mobile. I counted all of you like this. I counted. Yes, I counted you guys. Okay, let's use the first count. Then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 29, 30, 31, 32, 33, 34, 36, 37. Mr. Dixon, 37 of them. Please take note. So, Mr. Dixon is going to read out a code. We are going to show us where we're going to put the code on the website. Put your code. Once you put the code on that place, you can register. Do you get it now? Please listen. Please listen. Yes? Yes. No. Why want to be coming? It's the AGSM group. I'm going to call a code. It's once they call that code, they don't want to call the code. Write that code down on paper. By the time you get to the page where you're going to register account, please put that code in that box. Do you understand? Right? If you are already registered, okay. When did you register? When? This month. So there's something you are going to do. Go to that your account. You have an ID. Write that ID. It's going to explain how you report the account you registered. You need to do something. Thank God to send an email. Show that you are trying to. So those of us that are here, please, AGSTEP will call a code. Please put that code down and then write it in that box. You understand? And then those here, Mr. Dixon will call a code. Please write that code down. And that will display the website. There's a box where you put input that code. Do we get it now? I hope we are on this. And those of us from Mr. Reke, let me get. Please, there's a code he's going to call. Please put that code down as well. Do you get it? Let's get it. Okay. Do we want to sit like this or go back to the way we sat earlier? We should stay like this back. So while we are waiting for the please, there's a code that will be sent on the chat box. You can also register your account with that code. send your documents later.
Now, this one. Those of us are here now. If you know you can do deposit from $50 below, let me share. Now, it's in now Monday, $50 below. Let me see. 50, 40, 30. Oh yeah, let's sit here. Let's sit on this side. If you know you can do 50, 40, 30, please sit here. Do you know why we are doing this? So that some of us don't feel like we want to segregate. The reason we are doing this is because, you know, for you to take the trainings are not cheap. Listen, so that we don't think we want to, the training you want to take, that ADSEC, NDS, Orange will be giving you, they are not cheap. They are free. If I'm to train somebody on my own, as I am,